Hi, welcome to Get Personal with Finance. Today I have a question. What are 3 basic money skills I need to know? If I can break it down to 3, okay, I will do my best, but I can tell you as someone who personally practice what I preach, because I'm a practicing financial advisor planner, there's a lot, and it's something that you will always add to your skill list. But if I had to pick 3, here are the top 3. The first one is you got to learn how to save and maximize your time and your money. I cannot stress enough how many people, or especially younger folks, that come to me and ask me about investing and basically investing, anything that grows their money because it's sexy, it's attractive, it's very cool, and it just sounds really awesome to talk about because now you're talking about growing money, right? I always ask them, how are you right now managing your finances, specifically in terms of saving your money? What do you have in place? And I generally get a blank stare and some disappointed look because, it's not something they're comfortable talking about because they don't have much to share. And so to be able to save, another way of putting it is, how much right now are you paying yourself first, right? So that's what saving is. If you're not serious about saving and paying yourself and having a good system in place where your cash flow model, so in simple exercise that's kind of I wouldn't say a wake-up call, but it's very, very sobering, is you put together on Excel or just a simple sheet and just have 2 columns, the in column and the out column, right? Money in and money out. So the in column is how much money you're making a month, right? From your job, from whatever sources, your side hustle, whatever, right? From extra funds that you get from family members, whatever, right? The in on a monthly basis or weekly, however you want to do it. And then there's the out column, right? What are the outs? These are your monthly bills, expenses that are fixed that you have to pay, right? It is what it is. And then obviously the extra stuff that you would spend because you want to, more like your want items. So you got to be really clear about those things. But most importantly is that how much are you saving, right? On top of that every month. So when you save, you're saving for something. Think this through. Don't save for the sake of savings. What I mean is you're saving towards something. You're saving so you can invest that to enhance, build out your career, build out your side business, build out your investment portfolio, to get additional, education, invest more in your education, whatever that is, right? Buying things that are gonna make your productivity go up, right? In tech or whatever, software or hardware. So that's really important, is that it just really saddens me that such a basic money skill of saving is so brushed over. It's sad. I cannot name any of my clients that I work with that are successful that are not good savers. They know how to save. They know how to make money, and even with the extra that they make, they would then bring that back into their saving bucket, of which then they would then deploy those savings into more investing. So their cash flow model is not one that is a money in and then money out in expending, and then that's it. Or what's worse is like the common model of most folks is they make money, they spend whatever's left, they save. Well, it should be where they make money, they save whatever's left, then they spend, right? And I'm talking about spending as in like things that are beyond your fixed expense. But anyways, again, I cannot name a client that, they're good savers. Their mentality is always to save towards something, right? And if they can save money on anything that they can, their question is, how can I purchase or invest in this for less, but to get more, right? Questions like that. So remember, we live in a world where it's not back in Benjamin Franklin where a penny saved is a penny earned. A penny saved today, it's like a penny and 20 cents, or it's like, let's inflation, right? So $1 saved today is equal to like $1.20 or $1.30 earned. Depends on your effective tax bracket. So you got to take saving very seriously. If you can save $1, that means that, you know, if you pay a lot in taxes, depending on your category, you would have to make $1.30, $1.50 to earn $1, right? So again, like it's this level of mindset of saving towards something is really important. So going back to the cash flow model, is that so they're like my clients and those who are well off, and myself included, this is what I practice, is that when I make money, believe it or not, I invest about 70% of my income. So I keep my expenses very low, but I'm very aggressive, not in the things I invest, well, there's some, but I'm very aggressive in how much I put away towards my future, to build my future. So that's why I have the assets that I have today. So I make money, I save, and then I spend. But even with the money that I make, I reinvest that more. So my model is one that compounds. So I make money, I invest it as much as I can, and then whatever's left I spend. And then again, sometimes I don't spend that much, and whatever my investments earn, I reinvest it again. So the key is not how much you make, it's how much money you keep, right? And how much of that money you keep, you invest. So does that make sense? So it's not how much, it's like, it can be the case where, this brings me up to a great question, or a fine distinction between the word rich and, between someone who's rich and wealthy, right? So if I ask you what's the difference between rich and wealthy, what's your definition, right? So the definition that I've learned, that I've internalized, and it's part of my programming, the difference between someone who's rich and wealthy is measured by this. Wealth is measured by time, and rich is measured by a dollar sign, by money. So it can be the case that the richer you become, the less wealthy you can be. Kind of strange, right? How is that? So for example, rich is measured in dollar signs. So you make, let's say, $100,000 a year, but you spend about $100,000 a year. So you're living paycheck to paycheck. So on a wealth measurement, wealth is measured by time, is how long you go without having to work before you go bankrupt or out in the street, right? So you're measured by, basically, in terms of wealth, you're not wealthy because you don't have much time before you go out in the street and you're worthless, because you keep having to make money in, right? Because there's nothing. But if you make $100,000 and you get to keep $50,000, there you go, right? It's how much money then you're starting to build wealth. So don't mistake the fact that, if I make a lot of money, then I'll be wealthy. No, wealth is measured by time. So someone who's generally older can take on a lot more risk because they have a lot of time, because they have a lot of wealth. Because why? They have enough money where it allows them a lot of time, where they don't have to work. Just from their investments and their assets alone, that pays them a lot of money. All of that money that comes in allows them to live life without having to work for a job, right? So today, like most people, for example, or this is how it should be, is that the idea is you should have 3 to 6 months of savings, right, as emergencies. So that means that you're 3 to 6 months wealthy, right? So if things go really bad, at least you can count on 3 to 6 months of you have enough reserve. So that's how wealthy you are. But someone who's very wealthy, because they have passive income every month, that is beyond their fixed expenses and even beyond their regular spending. So that makes them permanently wealthy, right? They don't have to lift a finger. And with the income that comes in, they're wealthy. It pays for all of their expenses and then some. And they don't have to work, so they're wealthy. They're out of the rat race. So that's kind of the definition of someone who's wealthy. But if someone who's just, that drives a nice car, that makes a lot of money, but they're living paycheck to paycheck, they can make $100,000, $500,000 a year, but they're spending that much, then they're not wealthy. They just make a lot of money, right? So there's the other side of the equation that's really important, that really is built on that money skill of saving and that idea. So I want to stretch that to challenge your thinking and get you to kind of better understand just something so simple as savings can really build your wealth and secure your finances. but it's so overlooked and brushed over. It's sad. So anyway, so that's the basic skill is learning how to save and paying yourself first. The second thing is, this money skill is really important, is knowing your numbers. You cannot say that you're good with money without understanding numbers. And I'm not talking about that you have to be a math major, or you taking calculus or statistics or some advanced math class. You don't need any of that. You can add, subtract, you're good to go. Divide and multiply, you're good to go. Knowing your numbers is, again, understanding what comes in and what comes out and what's your net, right? And with your net, if you can build upon that, that's the key. And knowing your numbers is very sobering, because you can make decisions based on understanding your cash flow. Because a lot of people they make investments where they feel uncomfortable because of the risk, is because they over-allocate, right? They invest way too much, or when they have a loss, they overreact because they're now thinking, oh my God, like this investment is not doing well, and then they'll sell, or they overreact because they're like, oh my God, that's a lot of money, et cetera, et cetera. They didn't really account and plan and itemize that investment as part of their bigger finance picture. So they don't become reactive, or when the investment that they made has gone down in value, they're okay. But a lot of beginning investors, or those who are, you can tell already they're not good with their finances, is they have this overreaction or reaction, where others, they're very calm, collective. They're like, okay, but I have all these other investments, or I have these things, or I have a great secure job or career that I can really make more money. You get what I'm saying? Like, they have a good understanding of their finances and their quality of life, and how money plays a part in that. So really, really important. And there are so many apps and softwares out there to help you. I mean, apps, I wouldn't say software. It's so many apps and free programs to help you budget, to help you itemize expenses and track and document and forecast. There's so many things that are free. And I have links on that we share. And they are the best. You don't need to pay anything. There are so many free resources. It's just sad that people don't ask the question and they don't actively pursue it. You'll find what you seek, right? So I guess it's not serious enough for people to really dig, but there are resources. And this channel, one of my goals is to make sure that you understand where all these resources are and to empower you. So really, really important to do that, to know your numbers, and there's so many resources to help you that makes it so easy. All right, and it's free. So lastly, the third basic money skill is, I guess, I call it a money skill because, I mean, I'm in the world of finance, but you got to be able to ask good questions, or just, you got to be able to ask questions and learn. I cannot stress enough that for you to be good with your money, right, money skills, is you got to ask questions. There are no dumb questions. You got to ask questions and ask more questions, and you got to get answers to those questions. If you don't get answers, or good answers that you believe are good, then don't do it, right? Or just having the mindset of being critical and ask questions and wanting to learn, because that's how you get better with your money and well, money is money, but your finances in general, how you make better financial decision making, and how you assess risks, how you assess investing, to buy a car, lease a car, like to me, to buy my building, or to continue to rent, so on and so forth, is the ability to ask questions. There's a lot of power in asking questions. So, there's a saying goes, you can judge a lot by a person, what questions they ask, right? So I cannot stress enough that a very important money skill is for you to be critical and ask questions. I mean, you got to make sure that you are in the driver's seat of your finances. So part of that is asking questions. So you drive your finances, personal finance. The personal comes first, right? Don't let finances or numbers drive you. What's sad that I see is this, people don't realize this, but they have a part-time employer that they work for that they don't know about. Or some of them do, and they hate their part-time employer or full-time employer. It's called Visa card, MasterCard, and American Express. I mean, they work for these people, and because why? They gotta pay, it's just, they gotta pay the bills. These companies, these folks, right? You can personalize it, whatever that moves you, robs you, takes money from you, and you work for them in a sense, right? I mean, Visa, American Express, MasterCard, I don't know if Diner's Card is used anymore, but you get my point, or some lender. So you're stuck to them, and they got the better end of you, and it's not the other way around. I mean, smart people that are good with their finances, they put those three to work. Like for example, like for me, that's one of the questions I ask is like, how do I make these credit cards work for me, right? How do I take advantage of these low interest rates today so I can better my finances, right? Like refinancing my house, because by doing that, I save $30-something thousand. It's just minor, but hey, that's a savings. Because remember, whatever I save, right? Like saving 30,000 would be equivalent to like, you know, double that or whatever, right? Depends on your tax bracket, but hey, it's a lot of money. And not just that, but I save a lot of time as well too. I shorten my mortgage. So it's really, really important to ask questions. So to go back, so like those credit cards work for me because I get, my credit cards work for me because I get 30 days, right, to use their money. And then I get rewards for doing it. Miles, cash back, perks in terms of access to certain savings, etc. So there we go. I use low rates with the money that I can borrow to then use that to pay down debt or do other things that makes my business more productive, to make my life more productive, right? That then as a result, it yields better for me, right? Overall, like with my time and money, it multiplies. So that's really important. But it's sad that I guess people are not asking these questions. Like for example, you know, like they mistaken that, I'll give you a good example. Like when you go to the bank, and normally like whenever there's, you would get approached by a banker or somebody there that want to sell you some financial product. And the common one right now is, hey, let me help you refi, right? So you can save more on your mortgage. Oh my gosh, like just based on the numbers, I can save you $500 a month if we refinance your house because it's a lower interest rate. So what they tell you is true, but it's not true. So where they get you is this. That refi that they tell you to do is that, let's say you had a 30-year mortgage and you pay down 20 years. So now they refinance you into another 30-year mortgage. So two things happen. Of course, your payment's gonna be lower because now you add 10 more years to your mortgage. Got it? So did you really overall save money? The answer is no. You basically just reduce your payment by adding more to the balance. So, you know, that's why there's this joke, you know, here's another joke for you is, you know, when you go to the banks, why do they hand out candy? And the type of candy that they normally give out are suckers because they take you for a sucker, right? And, you know, there's terms like, you know, bankers or banksters, and you know, they're there to make money off of you, right? And they're there to make money off of your money too. Like, so for example, when you go to the bank, they always encourage you to get a credit card, right? Think about this. So you gave them $10,000 in deposit. That goes into their balance sheet. They use that to loan out and they make very high rates of return on it in terms of interest payments, right? And they offer you the same thing by giving you a credit card with your favorite animal or whatever scenery or whatever in your credit card to make it personal and to encourage you to spend whatever. And so when you spend the credit card, okay, you deposit them $10,000, and when you spend the credit card, you make minimal payments. And they charge you like 20% plus return, you know, 20% interest on the money that you spend. But here you are with a savings account that you open up or a checking account, and they pay you, what, like 1/10 of anything at all return on your money. But here they are taking from you, in essence, kind of your money, and they're charging you 20% a year. Isn't that kind of insane? Like, I just want you to just think about that for a second and talk about money skills, right? It's to ask questions, like to dig deep and just don't take things at face value. that's just two very simple examples that I can think of that is so apparent to me. But it's sad that people do believe these things. Like, oh my God, this credit card makes my life easier because I make minimum payments and I can keep spending. No, it ruins you. I mean, your savings account or investment account is growing, let's say 5%, but here you are, you have debt that you're servicing at 20%. So my God, right? Ouch. And then the other thing is about this refinancing thing where the loan officer looks you in the eye and tells you that they're helping you and your family by saving you $500 or $1,000 a month, where you're not reading the documents, where you will see that your total balance is way more than your total balance right now. It is shocking. And it's one of those things where it's good here, but your future is robbed. It's jeopardized, it's compromised. So again, be critical, ask questions. It's a basic money skill. There's no dumb questions. Again, at the end of the day, you go to these financial institutions, you work with financial professionals, whatever. It's important to ask and get answers. And it needs to be crystal clear for you, because again, it's your finances, it's personal to you, and you need to take it very seriously. And you don't want to make assumptions, like the joke about when you assume, right? And you don't want to assume in finances. It will come back and bite you. If you ignore something, it doesn't mean to go away. Like ignoring your debt or ignoring, calculating like some of your bills or some of these financial decisions, and you're just gonna brush it off and don't think about it, but it's there. It doesn't disappear. It's almost like this. I think about my son, right? When he was like, I think 1.5 or so, kids have this adorable thing where they think when they close their eyes that they kind of disappear, that like they can hide, and because they would hide, and I don't know, it's the cutest thing. So when you close your own eyes and when you ignore it, the issue is it doesn't go away. It's there, right? And so you got to take care of it, right? That's just like you take care of your house, you got to take care of your lawn or whatever. You got to take care of these financial matters. And so by ignoring it, one thing I've learned in like meditation, it's about being present, and is that if you bury something emotionally, like issues that you need to deal with, you bury it alive, right? It's such a vivid example of burying something that's alive. By burying it, it's still there and it's alive. You're not doing it. And the more you bury and suppress, eventually there's going to be some explosion or some issue, right? And I think that's the other thing too, is because part of that money skill is people don't ask enough, or they make these assumptions, and then into the future, boy, are they surprised, and it's sad. They realize, oh my God, I wasted 5 years, 10 years, or I lost this much money. It's time and money, right? The two currencies we trade every day. It's our most valued currency, and it's gone, and it's so sad. And so anyways, but don't mean to go deep in that end, but just for perspective. So those are the three things I can think about that that hopefully with what I share with you can help you. Please like and subscribe, and I'll see you in the next video.